I would call it macro 2.0, which is basically kind of the meme last cycle was institutions are coming, and they never really came. I mean, around the margins they came. Hedge funds would trade Bitcoin. There's some entities that would do it, but for example, companies didn't really have the guts to follow Michael Saylor into Bitcoin corporate treasury. We didn't see any Bitcoin ETFs. And so this cycle, assuming that some of these Bitcoin ETFs get approved, and again, these institutions see another higher high that kind of shakes them out of what they thought Bitcoin was. I think you could have more normalization among institutions and actually have, not just narratives about it, but actually allocations.
Welcome back to Money 101. Bitcoin has surpassed $45,000 for the first time in almost 2 years, reaching a new yearly high. Its recent surge from $42,000 on January 1st indicates a 6% increase in the last 24 hours, and a remarkable 170% growth over the past year. This performance precedes potential approval of the first spot Bitcoin ETF in the US, with the SEC reviewing 14 applications. The last time Bitcoin hit $45,000 was 20 months ago, marking a significant milestone for the cryptocurrency. Global macro investor Lyn Alden sees this as just the beginning, emphasizing Bitcoin's robust monetary qualities. Stay tuned for more insights by liking, subscribing, and sharing your thoughts.
If you see how traditional pools of capital treat gold over decades, so multiple studies show that if you add a slice of gold to an otherwise stock bond portfolio, the risk-adjusted returns of that portfolio are better. And that's because gold tends to do well in decades where neither stocks nor bonds do particularly well. So the 1970s, the 2000s, for example, it's that non-correlated asset, or it's a differently correlated asset, and having that rebalancing slice in your portfolio was helpful, even though that was not very accepted in traditional pools of capital, even after decades, right? And so there are kind of these things that are on the periphery that the whole point is outside money, right? And so even if it's sometimes outside money that's encased in an inside wrapper, there's still kind of skepticism about it. So I think that somewhat tempers it, but I do think you're right that so this past cycle was about macro. I think the next cycle, there's kind of two things I'm kind of looking at. One is I would call it macro 2.0, which is basically kind of the meme last cycle was institutions are coming, and they never really came. I mean, around the margins they came. Hedge funds would trade Bitcoin. There's some entities that would do it, but for example, companies didn't really have the guts to follow Michael Saylor into Bitcoin corporate treasury. We didn't see any Bitcoin ETFs. And so this cycle, assuming that some of these Bitcoin ETFs get approved, and again, these institutions see another higher high that kind of shakes them out of what they thought Bitcoin was. I think you could have more normalization among institutions and actually have not just narratives about it, but actually allocations. And so I think that's one. Number two is I think for me the more optimistic one is the rise of these little Bitcoin hubs. And so Bitcoin Beach is an obvious early example, but there's Bitcoin Jungle, there's Bitcoin Lake, there's Bitcoin Akasi. I'm probably pronouncing that wrong. I was written rather than there's I think 2 years running the Bitcoin Indonesia conference, run by a woman named Dia. There's 2 years running the Africa Bitcoin conference with Frida and others, and they basically these little recurring hubs around the world and in some of the markets where it's most important. That I think is more powerful than even things like the Bitcoin Commons, Bitcoin Park, Real Bedford, PubKey, these pubs, these kind of locations within developed countries that are kind of these recurring, Bitcoin hubs. I expect over the next cycle, those to reach more critical mass. So this cycle was like the cycle of like those coming into existence, or at least, after the initial few, there's been a spread of those. I actually did a podcast with Kathy Wood the other day, and they like track this, and they kind of have like this number of how many of these little hubs that they're noticing, and it's like a crazy number per quarter. Most of them don't reach necessarily the awareness of the ones I mentioned, but there's a lot of these. And if you fast forward 4 years, I expect these be much bigger and more numerous. And that's, in my view, one of the healthiest things that occurs. That'd be one of the healthiest types of cycles.
Yeah, I love that.
So that's I think the other half of the coin. It's institutional liquidity. Institutional capital is good because it can add liquidity to the Bitcoin network and take some of the edge off of volatility potentially, that kind of rebalancing effect from portfolios and big pools of capital, and widen the ownership to varying degrees. That's healthy for liquidity and volatility. But I think a better thing is the actual, self-custodial or community custodial hubs that are popping up. I think that's more important.
Sure.
There are a lot of people doing the work to kind of argue that Bitcoin is like halal money. Like it's the fiat currency is based on riba. It's based on interest rates. It's based on credit. It's based on things that some interpretations of religions would prohibit. And Bitcoin is more in line with how those places view money. And so I do think that the Middle East in general, really could catch on to Bitcoin. I don't know if it'll happen next cycle. I'd like to see it happen. But I do think in general, these hubs are going to pop up around the world. What I mentioned before is basically the hubs, Bitcoin hubs spreading around the world, and therefore any technology that empowers them. Anything that allows them...
Fediment.
Yeah, exactly. And anything that helps that. So anything that allows communities to set up their own custody, anything that allows them to, build their own custody solution, build their own wallets, get liquidity, deal with scaling in a high fee environment. The worst case scenario would be, that all these hubs arise and all their Bitcoins held by Binance or held by custodian XYZ, right? Some gigantic, multi-billion-dollar honeypot outside of their borders, outside of their community. It's much healthier, I think, to distribute that, empower communities as much as possible to be able to hold their own Bitcoin. And so custody is not entirely a Boolean thing of like the person custodies it, or there's two extremes. Like there's you custody it, which it's not extreme, but it's one end of the spectrum is you custody it yourself. The other end is it's all into one gigantic shared honeypot. And then there's the spectrum on there is, okay, if some people you want to encourage as much as possible to self-custody. If they can hold it, if they can deal with the fees, if they have that long enough time to be able to deal with that. But if you want to have something in the middle, is at least distribute that custody away from these gigantic pools and closer to their own community, ideally in their own community. So I think that's important. I think anything that makes Lightning more solid is good. We'll see what happens with things like soft forks, covenants, to see if there's other scaling solutions, or even just things don't require forks. And any sort of promising scaling things that just make interacting with Bitcoin easier to do and cheaper to do and more efficient, while preserving as much of the ethos as possible. So it's really about those hubs, and then about empowering those hubs, because Bitcoin has to win not just on its hardness, but on its what is the user experience of someone who comes to Bitcoin. What is it like for them to use the asset? And so I think that it's gotten way better. Like I really liked, for example, the tap sign or nunchuck combination.
Yeah.
And I'm not an investor in either of those. But that's an example, I think, of a good sweet spot for UX, especially for smaller amounts. And so I'm looking forward to see more of these kind of hybrid solutions that, say, how can we get UTXOs spread out more? How can we get custody closer, at least closer to the person, and how them kind of experience Bitcoin as it's meant to be?
There's heightened anticipation in the financial sphere as prominent asset management firms vie for regulatory clearance to launch the first spot Bitcoin exchange-traded funds, ETFs, in the U.S. key contenders such as BlackRock, VanEck, Valkyrie, Bitwise, Invesco, Fidelity, WisdomTree, and the ARK. Invest and 21 Shares collaboration have all submitted updated filings to the U.S. Securities and Exchange Commission, SEC. The initial deadline for ARK Invest and 21 Shares proposed ETF is January 10th, with expectations running high for the approval of multiple spot Bitcoin ETFs by then. Fee structures are also coming into focus, with Valkyrie and ARK Invest proposing a 0.80% management fee, while Fidelity aims to stand out with a competitive 0.39% fee for its Wise Origin Bitcoin fund. Invesco offers a 0.59% fee, coupled with a 6-month waiver for the first $5 billion in assets. Bitwise plans to seed its spot Bitcoin ETF with $200 million, and BlackRock, despite Jamie Dimon's consistent reservations, has enlisted JP Morgan as a lead authorized participant, aiming to seed its ETF with $10 million on January 3rd. Share your thoughts on whether the SEC will greenlight spot Bitcoin ETFs before the January 10th deadline, and be sure to like, subscribe, and turn on notifications for more updates.